Happy Thursday, my friends. Oh, man. Full-blown cray-cray on a Thursday. And what are you going to do? News isn't good. I have no good news for you. We're just going to be quiet. We're not going to talk about it. We're going to talk about it. There are some things happening that I think are guiding us in the right direction. But overall, we got problems. The number one problem is, well, you could say, maybe it's Goldman Sachs shorting the bond market, destroying it. That's not just Goldman Sachs. It's all Wall Street. Unfortunately, this is going to cause interest rates to drop quickly and violently at some point. We're not going to get what I was hoping for, which was a nice, smooth drop in interest rates over time. That's what's best. Nope. When they unwind this thing and everyone else on Wall Street who's printing cash, see, there's always an easy trade on Wall Street, right? So people go there to make money. They have inside information. They know what's going on. Everybody's ganging up on the bond market. Everyone's shorting bonds. Why? The dollar's under attack. United States is weak. Why not? China doesn't want to take on our debt anymore. Who's going to buy it? China's selling. The Fed's selling. Why not short it? Now, that will stop at some point. And when it does, the short rally will rip faces off. There'll probably be multiple suicides, that amount of money that's going to be lost on the other side of it. That's how ugly it's going to be. From a chart perspective, from a bond perspective, yeah, you just leave that arrow up there. No need to delete it. Bond prices just keep going down, even though, today, for example, we have a green candle. We're still down 23 basis points. And this is a sharp drop in the last week. You've probably seen, in the news, hey, 30-year fixed rate mortgage just hit 8%. This is true. The average hit 8%. That's for conventional loans. FHA, VA are still in the 7s, and you can get high balance conventional ARMs in the 7s still. But we're not talking about 6s anymore unless you're doing a 2-1 buy down, which is what I recommend in this marketplace for sure. If you're looking to buy a home, definitely do a 2-1 buy down. If you're not sure what that is, check my channel. I've got a video there about it, or reach out to me and I'll help you figure it out. That's the program to use right now. So there's a quick snapshot of some things we're going to talk about. Powell. So Jerome Powell was interviewed today. And it was a moment in the markets where you almost thought it was a rate decision day. I mean, if you look at the markets today, look at the moment he was supposed to be speaking, which is 11 a.m. Pacific, market went nuts. Okay, just like it does on a Fed interest rate decision day. So a lot of people waiting with bated breath. Why? Well, because the direction of the Fed is somewhat unknown right now. You're hearing some Fed presidents say, hey, we think we could raise rates more. Some saying, no, we need to see what happens. But the data has been coming in too good. Remember, this when we're talking about the Fed, we're talking about a manipulated market. Bad is good and good is bad. So you look at today, jobless claims dropped. They were less than expected. Less jobless claims means labor market's strong. Shoot. That should be a good thing, shouldn't it? Except when the market is expecting the Fed to bail everyone out. Whenever you have things that are good, whenever you have good news, the Fed's not going to. They're going to say things like this: inflation is still too high. And lower economic growth is likely needed. Oh, no. You did it. That is not what we wanted to hear. Because, mind you, they have a big say in this. Fed raising rates is supposed to slow the economy down. It's supposed to hurt. It's supposed to keep people from buying things. It's supposed to drive prices of things lower. That's what inflation is, right? It's trying to drive prices lower. It means you need to decrease demand. It means you need to make things more expensive. But in a healthy way. Not more expensive in an inflation way, more expensive in a healthy way. Meaning if you're borrowing money to buy stuff, It's going to cost you more. So lower economic growth is likely needed. That is what the market saw today. Not good. I might do some charts here today as well. We'll see. I might. Interest rates are not pretty. We just aren't, mid sevens, FHAVA, high sevens, low eights, conventional, high balance, conventional is definitely in the eights, unless you do an ARM with 20% down, then you can get into the sevens there. That's what I'd recommend if you can do it. So essentially, what Powell said today was extremely bearish for stocks, extremely bearish for the economy, because essentially the Fed is rooting against us. The Fed is actually attempting to use their tools that they have to harm the economy and to stagnate growth, to stop growth. It's not what you want to hear, not if you're a fan of the economy doing better. I do not think that they can do a whole lot more interest rate hiking. But it seems like they're a long ways away from wanting to step in and do something. And apparently the market was expecting that. We also have this situation now in Israel, the Gaza Strip. I do not know a lot about Palestine or the geography over there, or what the heck is going on with Hamas or Gaza or I really don't know much about it. I do know this: war is not good. I know that it's not good, and I wish there was no war. I wish no innocent people would have to die. Just terrible stuff. No matter what side you're on, people are taking sides. It's this, it's that. To me, it's all bad. I wish none of it would happen. It is a reality, though, and it seems like there's, this region has been sort of sitting on this powder keg for some time. Very delicate situation where there's been disagreements, significant disagreements. People who hate one another live next to each other. It's a recipe for disaster. And it seems now that we've got a full-blown conflict going on here. This could also cause some concerns. Not like in Russia and Ukraine, where it's kind of like, those guys are in front of it. It's way over there. It's like, no, this is the Middle East. This is a very big deal. We have terrorist organizations potentially involved here. We've got other nations that might be funding those going on. This is just sort of another thing in the mix that is overall not good. This isn't giving anyone warm and fuzzies. It's the opposite. It's extremely sad. So overall, when you look at something like war, remember, at the end of the day, what is war? You'd say, well, it's this person who hates that person, or this. Maybe that's how people justify it. But at the end of the day, what are they doing? They're fighting over real estate. I mean, every war has been about property. We want to control this property. We want to own this property. We want to dictate what takes place on this property, who can come to this property, who can't come to this property, what documents you need if you're going to be on this property. So it's all about real estate. It is. It's all about it. And when you get people say, hey, well, we don't like these guys over here, so we want to go take over that property so that we can get rid of them. And at the end of the day, it's all about it. It's every war ever is about real estate. You might say, oh, well, it was the king's daughter who was, spoken poorly of by this guy, and that's why they went and fought. Maybe, but you know what? That king wanted that other kingdom, and it was about the land. It always is. I just wish it didn't have to happen. It's disheartening, to say the least. But this is something that also starts to factor in to the situation, especially if United States is providing more funding. We're funding all these wars. We're spending all this money we just don't have. That's not helping the overall outlook in the bond market, which is ultimately what's dictating all these things. So a lot of people saw this. Now, for buyers who are saying, keep in mind, buyers that see this, it's turbo bearish in their minds. To them, they'll go, hey, 30-year fixed rate mortgage just hit 8% for the first time since 2000. Not a good time. That's what a buyer sees. Bad time. I want to see a lower rate. A lower rate would make me feel better. That's true. And, I totally understand that. It makes a lot of people feel better. What's hard to, and this is why the 2-1 buy down is so important, because even if you are going to get an 8% rate, which most people are not going to get 8%, most people are going to get a lower rate than that. But if you are getting an 8% and you do a 2-1 buy down, now you're paying 6% for the first year, 7% the second year, and then 8% if you haven't refinanced by then. So it gives you a couple of years for rates to calm down. And so and it's paid for by the seller. So it's not like you're, bringing money out of your pocket to do it. That's why it's so important in this market, because you can take the fact that most buyers aren't going to want to participate because they see something like this. If there's fewer buyers in the marketplace, that's actually good for buyers. If you're buying something, you want to be buying something that other buyers don't want to buy. If there's a bunch of people who want to buy something and you also want to buy it, that's not good for you as a buyer. So for people who want to own real estate, and I think a lot of people do, this is the part that is the hard part. Holding your nose and pulling the trigger, figuring out how to get yourself a good deal and a manageable payment in a market that isn't necessarily ideal, where prices haven't really come down much. Remember, I told you they wouldn't. Been saying this for months and months and months. Higher rates doesn't cause prices to go down. It causes price acceleration to stall. You can see this on the charts for decades. And then when rates do drop, then we'll see the price acceleration and appreciation resume. Let's take a look at this. Let's do something here. We haven't done this. This is a daily chart. Let's zoom back out. Okay, you can see when the time in which the Fed was interfering, when the Fed was buying, when the Fed started selling. Look at these bond prices. Now, obviously, they've just gone down. I mean, they just continue to relentlessly go lower. And this is going back into March of 22 right here. However far back I go, prices were higher than they are right now. And you can see this is all Fed being involved right here. That's 2020. That's COVID. So the Fed gets involved here. Candles look weird because the way that they're moving price, the way that they're controlling it, they're keeping it up here. And you can see right here when they start unloading, right? And then just the bond trade is on. Wall Street is printing money with this. Wall Street has been printing money with this. This is the easy trade on Wall Street. Now, when that changes, whether it's something that the Fed says, something that the Fed does, something that happens, maybe a good inflation report, something along those lines, any of that stuff that could happen, we're going to see a very violent move higher here in bonds. And that was what I was hoping wouldn't be the case. I really didn't want to see this, but the more and more we see what's happening on Wall Street, Goldman Sachs tops estimates on stronger than expected bond trading. How many times have I posted this? You'd think it's the same article every quarter. How do you make money trading bonds when bonds are doing this right here? There's only one way. You're shorting them. You're shorting bonds. And made $11 billion. It's a lot of money. Not the only ones. You can't be mad about it. It's a free market. This is how it works. It'll balance itself out. It will. People will get their faces ripped off. But rates will drop, and they'll probably happen pretty violently. So we're not going to go from 8% to 7% to 6% to 5% to 4% to 3%. That's probably not what's going to happen. It's very likely we're having an overnight situation. Rates drop to point, and then they'll start dropping. Boom, 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 boom. As all of these shorts start unwinding their positions. And as that's happening, as bonds recover, and there's actual technical analysis that says, hey, might be a good idea to buy some bonds, then you're going to see hedgers, then you're going to see investment banks, you're going to see huge money managers say, maybe we should buy some bonds. We're getting a decent yield here, and we might get some appreciation. We might buy these bonds at 102, 103, 104, 105, and then I go to 110, 115. So we could trade them. We could sell them off and make quick money with them, or we just hang on to them and just make our 5%, 6%. I'm surprised this hasn't happened yet. You know why it hasn't? It's an inside game that's being played. An inside game. The Wall Street insiders know, hey, we're short bonds right now. Leave it be. Leave it be. We're just trying to, you know what we do. And at some point, one of them will capitulate. One of them will get out. The rest will know it. And then bond prices go higher, rates go lower. But as it stands, they're just printing cash. It's crazy. Absolutely crazy. I feel this one in my soul. Mortgage demand falls to the lowest level since 95. Interest rates near 8%. I think this one was from yesterday. And was this one yesterday also? It was yesterday. So we got two articles from yesterday talking about 8% interest rates. That doesn't help with buyer demand. And we know supply is really low. So far, demand has dropped a lot, but it's still outpaced supply. That seems to be at a fragile point where I just got a bunch of feedback from boots on the ground in this real estate market, a ton of feedback. And a lot of people are saying, hey, look, turnkey homes, the right locations, they're still getting lots of offers. Sellers that are reaching too far, they're sitting. Properties that aren't turnkey, they're sitting. Buyers aren't wanting to pay these prices at these rates and have to fix the property up. We're starting to get to a point where there's a little bit of distance between buyers and sellers in some cases. And that creates a soft market opportunity. We're talking about the 2-1 buy down. Remember, that's paid by the seller. So you need a market where sellers aren't getting flooded with offers. If you're going to get the 2-1 buy down and you're going to pay a much lower interest rate, you're going to have to do that in a market where maybe you're the only offer, or maybe there's you and one other offer and you're both asking for the 2-1 buy down. And the seller just has to pony up, plain and simple. Listen up, Buttercup. I'm going to need you to pitch in on this fat payment that we have to deal with. Otherwise,
check, please.
We're out. Let's keep doing what we're doing. Sell buyers, move up buyers, move down buyers, still stuck. Talked to a gentleman today. He wants to buy a new home and keep his current home. VA loan, 2.25%. He's like, man, it's hard for me to stomach the thought of 7-something%. I know. I get it. I really, really do. It's hard to fathom that. What it does is it makes people realize that tomorrow, the next day, whenever it comes, whenever rates drop to a super low point again, and we have this crazy market, it's going to be even crazier. It'll be even crazier than last time. Last time when we had rates in the 2-something%, 3%, I don't know anybody who was really thinking that we would see 8% again. So, yeah, rates might go up a little bit. They go up and they'll go down. But if you'd have said, hey, we're going to have 8% interest rates in a couple of years, people would have been like, how? Now that people know it's possible, I mean, just think about if you could go back in time and what you would do differently. That's going to be on everyone's mind. So I'm predicting an even crazier market than we had during COVID. Okay, a couple other ones here. Department of Justice, this is actually really good. I would recommend listening to this. Flag is not my favorite $1 million listing guy. I mean, it's a train wreck I can't stop looking at. But so I watched the show. Have to. Can't not. Also, Altman is a stand-up guy. But he does okay in this. Reality is there's people, this guy, unfortunately, what a burglar of turds this guy is. I mean, trying to disrupt the fact of how the real estate industry is run, how commissions are being paid to agents, saying that listing sellers should not have to pay the buyer's commission. It's such a stupid argument. And they're saying that it's illegal. And it looks like they're probably going to win. It sounds like they're going to win. It could change the entire face of the real estate business. It's really, really a stupid argument. It truly is. Because if you look at, what the seller is willing to pay the buyer's agent, they don't have to pay a lot. They could offer the cooperating broker a small amount if they wanted to. But you know what's going to happen? Home won't get shown as much. So it's a game. Play the game. You don't want to play like this? Then make up your own rules. But to go ahead and sue and do all these things, crazy. Absolutely crazy. And an opportunity potentially. One of my buddies was telling me this earlier today. I mean, what an opportunity for someone like a Zillow to come in and just replace NAR, get rid of NAR, get rid of this whole issue, rewrite the whole thing the way that it currently is, but structure it differently. Structure it differently from a legal perspective. So, okay, you go ahead and you sue NAR. We're all leaving NAR anyway. Good luck with your lawsuit. Good luck with your money. It's off. It's just such an unnecessary scenario to have in this market right here today. We do not need something like this. Is not helpful whatsoever. And now you have the Department of Justice also probing. Why? Look, when you sell your home, you don't even have to hire an agent. You can sell it yourself. You don't have to pay anything. You can sell it on your own. Don't pay anybody a dime. Go right ahead. This is silly. If you don't want to pay the buyer's agent very much money, don't offer him very much money. I know an agent like that. He offers $100 to the buyer's agent. Sometimes buyer's agents miss it. It's listed right there, but sometimes they miss it. Very, very questionable practice. But you can do that. You don't need to offer the buyer's agent X number of dollars. Right now, the way it's set up, you can kind of do whatever you want. I don't think you're going to get the best results as a seller if you do that, but you could do it. So why all this? Why all this legal mumbo jumbo? Why attack the industry? It's an important industry. It's a strong industry. It's huge for the economy. Now you have the DOJ and you have these idiots in Kansas City suing NAR. Opportunity is there for someone to come and fix this. But unfortunately, I think they're going to win. It looks like they're going to win. All right, so Jerome Powell was today. Tomorrow, basically nothing. So here's what I'm going to tell you before we start talking about, a couple more things. Hold on. Okay, so this is one. The Philadelphia Fed president says, hey, we need to hold interest rates where they are. Maybe that's not what Wall Street wanted to hear, but it's better than saying, hey, we're going to hike. Here's something else, too. This is from the White House. New actions to support home ownership. Allowing home buyers to leverage income from accessory dwelling units. Okay, so this was from yesterday. So they said today, HUD, through FHA, published a new policy allowing prospective borrowers to use a portion of the actual or prospective rental income from an accessory dwelling unit. This can be added to the borrower's effective income for the purposes of qualifying for an FHA-insured mortgage. So FHA's new policies will increase the ability of home buyers across the nation to obtain access to affordable mortgage credit when seeking to purchase properties with ADUs. Now, the reason why this is so huge is because ADUs, in most cases, are not legal second units. They're considered as accessory dwelling unit. They are almost like just like building on another room to your house. Your house was 4 bedrooms, now it's 5. It's not considered a separate unit. It doesn't have a separate address. And in order to use potential rental income, you've needed it to be a legal second unit. So it would need to be technically a 2-unit property or have 2 different addresses, or at least be on title as 2 units. Then you can use potential rental income for the separate unit. What they're saying here is that even if it's an ADU, which like in San Diego is huge because we have the very loose ADU rules here where you can build accessory dwelling units very easily. They're not legal second units though, so you can't use the potential rental income from them. Now they're saying for FHA that you will be able to. The flexibilities will help more first-time homebuyers, seniors, and intergenerational families leverage ADUs to build generational wealth through homeownership while creating new affordable housing in their community. So this is one of the most common sense things I've seen done in so long, not just from the government about housing or just from this White House in general, but this makes so much sense. And I really, really hope that the word gets out about this. So I really advise you to let people know about this. This is a game changer, especially if you're listing a home that has an ADU. You can let potential buyers know about this. A lot of people are looking for homes with ADUs or second units. A lot of potential younger investor types, the single VA buyers, first time home buyer couple that, wants to build a portfolio and they're buying with FHA and they're getting a down payment from their parents. Hey, this is something that will allow you to do that. Now you can use that income. And on an ADU, even if it's just a 1-bedroom, you're getting $1,500 a month, $2,000 a month in rent. That's going to increase your purchasing power like 250, 300 grand. And it's massive. So if you're looking at homes, that are 800,000 or 700,000, let's say, with your current pre-approval, you find one that's $1 million that has an ADU, you can still qualify. Now, that's huge. I think that this went under the radar for the most part. I didn't see anyone posting about this or talking about this, so I really wanted to bring this up. I'll post the link as well in the description of the YouTube. But this is one of those ones where it's like, hey,
all we want to do is pump you up.
Finally. Finally. Okay. Let's see. One more here, and then we'll get to charts. Tomorrow, Friday, stock market. Expect fireworks. Not because there's anything particular going on, except we have the tri-witching. That's right. The tri-witching is happening tomorrow. So let's take a look over here. Let's go to SPX. This is okay, let's do this. Go to the daily. There's the S&P. Tri-witching. What does that mean? That means we have options expiration. We have daily option expiration, weekly option expiration, and quarterly option expiration. Monthly option expiration. So day, week, month. Next Friday, you have the quad witching. So this coming Friday, tomorrow, will be a little bit wild. And then next Friday will be wild. The reason why I expect tomorrow to be particularly wild is because there's no news. There's nothing going on. And so what typically happens on those days is that the actual fund managers and stuff, they're not going to be putting any money to work. So the manipulators, the hedge fund managers, the market makers will just do all kinds of crazy things to the market tomorrow. So just be careful. Don't make any decisions. If you see something crazy tomorrow, don't make any decisions based off what happens tomorrow. Like literally wait till Monday. We could end up, if you just look at the end of the day, you might see, oh, stocks didn't really do anything today. It's going to be all over the place. That's my guess. Now, if we look here at the S&P, we're right on this support line, this trend line here from this upward channel that we've been in for quite some time. Support has been broken, turned into resistance. We have new support down here. And this is what needs to hold. So let's go ahead and make our notation here. This is now what needs to hold for the S&P. Below here, it's really just a lookout below situation. There is some support, but it's way down here. We need this to hold. So essentially you need this to kind of go sideways or just do something and stay up in here. If it loses this tomorrow, which I think is actually entirely possible, and we're going to see a lot more downside. That's just straight up what's going on. NASDAQ is in a similar situation, except for it had a little bit higher climb and is now in a downward parallel channel. This is actually more bullish, believe it or not. You see this right here, this kind of formation. You call it controlled selling. I call it a death march. This is a death march for bears right here. Typically on something like this. Now, look how much downside we could have though and still be in this. We don't know when it's going to break out, but at some point, usually when it's, controlled selling like this, it tends to break out to the upside. When there's controlled buying, moving higher, it tends to break out to the low side. Now, we'll see what happens with that tomorrow. Bitcoin has been strong, very strong in this. There's a support level that we marked out a while back. Remember we had this upward channel on Bitcoin that I was watching, tried to get out of it a couple times, couldn't, back into it, back to the top of it, and then broke out the other side. And when that happened, people got turbo bearish. And what did I tell you right when that happened? The day that this happened, I did a video. I was like, look, here's the support. Let's see if it holds. And looky there. It's held. It's held. Bitcoin looking very strong amidst a really wacky scenario. What does that tell you? Remember, Bitcoin is essentially a currency priced in dollars. So that shows you weakness in the dollar. That's what it shows you. It shows you real true inflation. That's what it shows you. That's what it's showing us. And a lot of people are expecting big moves to the upside in Bitcoin in the coming days. Two stocks that we've talked about a lot here. Tesla. So the big downtrend line there, which was hit after it was formed, right? You need two to create a form, then it hit for the third time here. That was the most likely one. And then the fourth time here, I thought we were going to bust through on that one. I really did. I thought that one we were going to break through. We had so much momentum. Just couldn't. We were in this upward channel. It's like, gosh, we're going to bust through this thing. Couldn't do it. Rejected hard. Then came back up, tested again, rejected again. This downtrend just won't go away. There's just infinite sellers for whatever reason at this point. When we do break out of that, it is going to be violently higher. Today, yesterday was earnings call for Tesla. Not pretty. Today, gap down and then just went lower. It is in an area here where I'm considering I have bids in at 200 and below, basically all the way down to the support here in the 150s. It's just hard for me to buy up here because now I bought most of my Tesla in the low 100s. And so it's harder for me to, I'm not really averaging in as well up here, but it is what it is. I'm going to be looking at that tomorrow. Hopefully I can get a couple bids filled. We'll see. But it has gap down outside of the upward channel. That is a turbo bearish look. Not pretty. Not a pretty sight for Tesla and the stock Tesla. But overall, I can't find, I don't have another company that I'm more excited about from an investment standpoint of whether they're going to be in 10 years, 15 years, 20 years, and what the company will be worth. So for me, I am still looking to accumulate more. I just have my bids in at lower prices. And if the overall market continues this ugly look and continues to go down, then that should drag Tesla down as well. It's a high multiple stock, so it should come down. Meta, the one I got wrong. I admit when I'm wrong, don't I? Of course I do. It just doesn't happen that often, but it does happen. Where are my... What am I missing here? Dude. How is this possible? Anyway, is it right here? All right, whatever. So I don't know where the arrow just went, but that's weird. I can't find it. So anyway, this is the one I sold $295 down here. You know, I've been buying this thing. I bought this under $100. So I was buying way back here. Started buying at 200. Average down, was pouring in big once we got under 100. And then let's see, we don't need this anymore. We had this insane upward channel. When that broke, I sold the next day, or somewhere in there. It was $295 right here. So it broke. We got a little bounce. Expecting it maybe to come retest. It haven't retested the channel yet, but look at this thing. Relentless. Why? Meta is considered to be an AI play right now. Not just metaverse, not just Facebook, Instagram, WhatsApp. It's considered an AI play, and that's why it's getting AI money. And they have some pretty cool AI going on. And so this is what's going on with Meta, and that's why it has continued to run higher, and I've continued to feel like a fool for screwing this up. Now, typically, you know, when you break out of these channels, you go, okay, well, where's the next likely target? If you just lay one on top of the other like this, that's your new channel, and that's what it's following now. But you know, I'm going to keep this right here. We'll keep an eye on it. I would like to buy more. I was hoping it would go much lower. I was really wanting to buy down here in this gap. That's what I was hoping into the low 220s. Not happening. That's fine. Apple also a big one. This one I don't have any drawings on here, but it's done well. See the big gap down, became a rejection area here. It's in a bearish move. It's currently in a bearish move. We're in a down channel here on Apple. But overall, Apple seems to be doing pretty well. They haven't had any big product movements, right? We haven't seen any new really cool things from Apple in some time, other than their phones seem to continue to not work. So you have to buy new ones, and that's a good business model. But outside of that, yeah, we're in a downward channel here on Apple as well. That, believe it or not, that can be bullish at some point when it breaks the upside. But as of right now, look how much potential downside there could be before that takes place. So I'm not really bullish on any of these things at the moment. Mostly, I'm concerned, focused, paying the most attention to, let's see here, the bond market. This is the one. This is everything right now. What is happening in the bond market is everything to the overall market, everything to the real estate space. It means everything. So this is what I'm paying the most attention to. And I can always tell the people we have in escrow haven't relocked anybody. Not a one. And we always relock people if rates drop while they're in escrow. Haven't relocked anybody. That's how you know that rates are just relentlessly going higher. So it's like it pays for you right now to move quicker as rates are going up, which is hard because you can't buy a house with a gun to your head. It's just not the way to do it. But unfortunately, moving faster is helping you save in this case as rates continue to rise. I don't think it can go on for too much longer. But what if I'm wrong? Will we see 9% interest rates? Will we see 10%? Is that possible? I can't tell you it's off the table. One thing we've learned about Wall Street greed, it knows no end. And right now, there's no one protecting the bond market. If the Fed either had a clue or gave a shit, one of the two, they would just say something softly that could change this whole thing. You know what? Bond prices are looking pretty good. We're going to start allocating capital to purchase bonds in the coming months. Even if they didn't do it, if they just said that, it would shake the shorts out. And then we would have a real market again. Instead, we have a pillaging that's taking place. Wall Street is pillaging the bond market for profit and murdering all sorts of industry, all sorts of aspects of the economy just for a trade. That's what's going on. You don't have to take my word for it. You can read them and weep. It's in the headlines. This isn't a conspiracy theory. It's what's going on. And it's not just Goldman that's doing it. They're just the one that gets touted the most by CNBC. They're all in on it. It's too easy. Look, if I told you, hey, this stock or this thing is going to go up for sure, or this is going to go down for sure, would you be able to keep yourself from buying or selling it? Probably not. That's what's going on. So until someone intervenes, and the Fed is the best option to intervene for that, because they wouldn't even actually have to do anything. All they'd have to do is just say something. Just say something. You know what? We've been eyeing the price of bonds. We think they're a good investment right now. We're going to seriously consider buying bonds. I mean, that would cause so many draws to get thrown in the trash. And it would correct this back to a real market. It's not a real market right now. It doesn't make sense right now. It's a manipulated market. So anyway, that is the main thing that we need to see happen. And hopefully, let's see here. Oh, I forgot to say, yeah, we lied. The Audacity of Dope. Great name. Been waiting for this to drop. The Audacity of Dope. What's up, Harry? You're welcome, my man. So, yeah, I forgot to say, yeah, we're live on all the platforms and whatnots. We don't have great things to say. We still have to talk. We still have to describe what's going on. We still have to educate people. We still have to tell people what's happening, how you can benefit, how you can take advantage of this market. Remember, even though you're seeing all sorts of things about demand being low, rates being high, at the end of the day, that's actually the right formula. It's the right formula that's ideal for buyers, particularly cash buyers, right? But if you are financing, 2-1 buy down, boom, you solve the problem by just getting a little help from the seller. A little help from the seller, a couple percent, give you a couple points, baby. And that'll help you go from 8% to 6% or 7% to 5% for that first year. And then you get the second year 1% higher. And then you go to the full rate in the third year. That's how to approach this market. It's not a huge difference. I mean, think about it this way. If you're a buyer and you're looking at 8% today and you go, I can't do 8%. And I told you, well, what if I told you in 2 weeks rates are going to drop to 6%? Would you be interested then? Yeah. Yeah, I would. I'd be a lot more interested at 6%. Okay. What if I told you get 6% today if we get the right seller? That's where it's at. You want to get today's prices. Tomorrow's prices, could prices come down a little bit more? It's possible. I think certain properties, certain areas, we very well may see that. Very well may see that. I think especially in the Midwest, there is a lot of inflated pricing because these areas haven't seen huge price increases. It was never a thing in a lot of these areas. Prices went up very slowly, very steadily, very controlled. And they've gone up, they've doubled in the past few years, things like that. It's crazy. That there's fluff in there. There's fluff in there. We look at San Diego, we go, hey, we're up 3% year over year, 4%. That's normal. That's business as usual. Nothing weird about that. There's no fluff in that. That's not frothy. You know what I mean? So if you're looking to buy in Southern California, particularly in San Diego, use the 2-1 buy down, get something that makes sense, get something that's affordable, but get prices of now, get the prices in the next 6 months. When these rates drop, prices most definitely will be going higher.
All we want to do is pump you up.
All right. Let's see. I got one more button to push as I head out for the evening. It's a tough market. There are ways to win. There are ways to be smarter, make better decisions. I'm here to help. Give me a shout. Call, text, email. You know where to find me. If you want to get hooked up like a tow truck on your home loan, pay no lender fees, get wholesale interest rate. Wouldn't that be great? Give your boy a shout. Have a great night, my friends. I'll see you soon.